Good morning, it's Jeffrey Cohen. It's Friday, June 24th. So the theme of this morning is there are recession fears, concerns out in the market. We have many, many more new lows than new highs in both stocks and fixed income. And I got to tell you, this morning I'm looking at the market action, pre-market, and it's just very confusing. There's no consistent theme. So the real question for you is, what do you do today? Now, one answer says just go back to bed. Maybe go to the pool, right? Don't trade today. But we're trying to figure it out. We're trying to see where's the action and what's going on in this market. Because what do we know? So we know that, like for fixed income, just as an example, fixed income yesterday, advancers beat declines, 63 to 26. It was a good day. But there was 29 to 1 new lows to new highs. So, and many of those, half were investment grade, half were high yield. So companies are struggling with their debt loads. You may not be reading about it on the front page, but it's happening. When we look at stocks, you're going to see a similar message here. This is according to FinViz. 5,200 advancers, 3,000 decliners, and yet 34 new highs and 639 new lows. So that's about 29 to 1. And so it's oddly consistent that there's 29 new lows for one new high, both in fixed income as well as in equities. And to use the analogy of investment grade versus high yield, there's many companies, maybe a quarter of them, that don't make a profit, that trade on the U.S. exchanges, that are listed companies. So those are your, high yield, and then your regular companies, the ones that make a profit. And so what's interesting, so we went back just to look at yesterday, real simple charts, nothing fancy here. We'll start with NASDAQ. And you can see here with NASDAQ, the dotted line, the dashed line is the open. So the market opened above where it closed the night before. So people got really excited in the morning. Maybe they watched my video and they're like, oh, I got to get in there. But they quickly, in the first candle, lost their nerve, sold. But then the market lifted. It lifted all morning till almost 11 a.m. Eastern. And then came down. So if you were watching, right, by, let's say, 1:30 Eastern. And then they ran into the close. They ran basically straight up from 1175 to 1250. So I don't know, something must have happened, something good must have happened. Same thing with the S&P 500, gap open. So market closed the night before at 3760, gap open, which means it opened higher, went up to 3790, came down to 3750, came up to 3795. Didn't really make any progress, but there's some motion there. And you just kind of wonder what happened, right? And so we took a look at the heat map. This is too big. I'm going to make it smaller for you. And I don't know if this is like a funny expression, stock market porn, right? I don't know if this means anything, right? But thank you, FinViz, for doing it. Let me show you what I see. It sure feels a lot like looking at porn. I don't know if there's any value here, but if you look at it from a year ago, drug companies are up, oil companies are up 30%. It's not like they doubled or tripled. The price of oil is through the roof, right? But their stocks aren't that much. Beverages are up, Coke and Pepsi, Costco, Dollar General, Procter & Gamble. Tesla's respectable, right? But the big companies, not so much. Amazon's down a third, Google's down 10%. Your media and entertainment are down because, COVID's over, people aren't sitting at home. Your semiconductors have fallen through the floor, likely because of Bitcoin not using a lot of capacity. Software's down, services down, tech is down, banking's down, credit's down, regional banks are down, asset managers are down. So if you look at it from a year's perspective, you had to really pick your spots. Ukraine war looks good. Energy continued to rise. I mean, not a lot of stories. People drinking Coke and Pepsi. And drug manufacturers. Healthcare. That's not an exciting market, right? So if we go now 3 months. So I'm trying to find a pattern. Why am I doing this? Why am I telling this to you? Because I'm trying to figure out where's the market going, right? I want to know where it was so that I know where it's going. And I'm studying like trend lines and things, technical analysis, voodoo. But voodoo is not going to help me in this market, right? So I'm trying to find, is there a narrative? So over the last 3 months, my God, Tesla's down 29%, Amazon's down 30%, aerospace and defense is down, integrated logistics, farm equipment, all your chemicals, energy's down with the exception of ExxonMobil. Must be something specific. Maybe people are going to smoke a little more, wash their hands, go to the dollar store. Telco is up a little. Drug manufacturers up a little, but pretty much the entire market's been decimated for 3 months. Okay. So people hid. They hid in healthcare, they hid in telecom, and they hid in food and beverage. And interestingly enough, they hit at IBM. Okay. Buy that. Let's look for the past month. Summer doldrums. Where are we at with the past month? It's a lot of dark red. It's a lot of dark red in financial services with the exception of BlackRock. You know, integrated suppliers are up. What's interesting about this is I've been reading that certain logistics are just locked up, but others are starting to free up. So it's possible UPS and FedEx are opening up a little bit. Go back to the last week, and you see bright green in healthcare. Now, I haven't read anything in the news. It says consumer defensive should do great. I've heard recession. Maybe consumer defensives are where people hide. They hide in real estate. They hide in healthcare. And interestingly enough, your big money flows must be coming into S&P 500 or NASDAQ. So Microsoft, Apple, Google, Amazon, Tesla, Walmart, Procter & Gamble, Costco. The big ones. Not all of them, but some of the big ones are up. And telco's up like crazy, 6% in the past week. Who knew? So I think there's a flight. Maybe that's the story here. Over the past week, we've had a flight to safety, a flight to dividends. Maybe that's the story. Let's see if it holds up. So I like to look at the futures, and I like to look at equities. I like to look at debt or interest rates. I like to look at precious metals, and then I like to look at the rest, commodities. So let's take a look. Stocks, going to be up today. They're going to be up 0.75%. Okay. Now, what I find interesting is the market, to me, my opinion, Jeffrey Cohen, investment advisor representative for U.S. Advanced Computing Infrastructures, Inc., is on a committed downtrend. The trend line is negative. The trend line used to be positive. This is a 2-year weekly chart. Now the trend line's negative. And it's not all the way negative because it looks like it's snapping back to this level. Boom. Boom. It's funny how it's like a horse that doesn't want to behave, right? It just keeps bouncing. But it's in a downtrend. So the question is, why are equities up? Now, interest rates are up. Treasury bond is a 30-year bond, right? 136.28. That's weaker. T-notes, right? 10-year money. They're down. So interest rates are going to be up. Stocks are going to be up. Interest rates are going to be up on this Friday. Gold, down. Silver, down a lot, down 1%. We're below $21 an ounce for silver. Copper, down 1%, almost 4 cents. 370. Oil up. Natural gas up. Gasoline up. So inflation, the biggest driver of inflation, is up today. So equities are going to be up. To me, that's like an outcome. Interest rates up. Your core economic feedstocks down. Energy's up. Now let's take a look. So some food is up, but hogs are down. I guess we're moving to eat pork today. Hey, it's the other white meat. I don't know the rest of this crap. I don't understand the rest of it. So I don't know if there's a story there, but that's interesting. This is crypto. So I always find it interesting, right? When the market gets very pessimistic, so does crypto. Well, crypto is starting to build its new support at 20,000. Crypto, Bitcoin support 20,000. It bounced below, it's coming back up, so you've got a temporary support level there. Okay. I don't know if 20,000 is a good price or a bad price, but it's kind of nice to see it build some support, right? It's interesting. Foreign exchange. Anything, Jeff? Anything? Anyone home? 135 US dollar to Japanese yen. So it's 135.12 yen per dollar. It's still historically very high. I think I looked at the yuan. The Chinese currency was also up a little. But the euro 105 euro dollar 105.24 is interesting, right? Because that's establishing its own range since May. You can see it right around between 104 and 106. Really, it's really between 105.50, right around 105.50 is the support level. It's the trend line. So okay. So we're trending even. So it must be that the Europeans are going to be tightening their money as well. Anything else we're talking about? There were some industries we could look at. So what I thought was interesting was, well, I like to look at the banks. How are the banks doing? So yesterday the banks were down, and Deutsche Bank was down a lot. And so I've got Deutsche Bank up for some due diligence this morning. What happened to Deutsche Bank? Okay, so real kind of market insight for you. What happened to Deutsche Bank? We need to know, just so you know. Credit Suisse down 5%. So I don't like it when the European banks crash, because that tells me that there's some monkey business, some funny business. A couple of banks look a little stronger. Ally Financial, SIVB is a very volatile kind of almost like a gaming company and a bank stock. RRBI is Red River Bank Shares. That's I want to say that's down in the bayou of Louisiana. It's always interesting, Red River. But in general, banks were negative. So how are we looking pre-market? You know me, I like to look at pre-market. So pre-market for the banks, there's 4 of them down. And it looks like about 15 of them up. It's interesting. And this one, SIVB, this is one of those, like I said, it's like a casino stock for people that want to play in the market. It's a very high price. The options, I looked, very, very high cost to the options. A very high implied volatility. And it's really just a playground for stock traders. That's fine. Talked about crypto. This is interesting. On the miners, I like to look at the physical miner stocks and the steel companies. So Cleveland Cliffs looks like it's going to bounce off of a low of 1568. You guys have heard me talk about Cleveland Cliffs since it was $22 a share. We like the company. We like what they do. We like their business. What I don't like that hot rolled steel. So Cleveland Cliffs bought the U.S. operations of ArcelorMittal. Tons of steel mills in the U.S., integrated steel mills. They own an electric arc furnace steel company, AK Steel. They also own heavy for like 100 years iron ore pellets. And you can see the stock ran up from $5. God, I wish I would have bought it at $5 or $6. That would have been really sweet. I'd have been singing all the way. It hits 20, starts to act like an investment bank. Oh, we're going to buy back shares and we're going to do all this stuff. Well, no, you're a steel company. When you make money, you pay down debt. That's what you do as a steel company. And you raise wages to help out the men and women that work for the unions that make the stuff in a very dangerous, hot, uncomfortable environment. And then when the market comes down and the economy comes down, you tighten up your belt, you take the money away, you borrow a bunch more, and you go through this painful cycle, right? And you just hope that the U.S. economy will last long enough that you can pay down the debt and you can stay surviving. Well, look at that. 33, it hit a peak. Just call it 25. I don't care. Now you're down to 15. There's people that are crying about Cleveland Cliffs. Oh, Jeff, I don't understand. How could it happen to me? But it happens. You're in an economic downturn. You're in a recession. I don't care what people say. I'm calling it. We are in a recession. It may not happen. It may not get announced June 30. It may be September 30. We're in a recession. We're in a downturn. This market is crap. The economy is garbage. Our leadership is not doing very well for business. And so what's going up? A bunch of Bitcoin miners. What's nice is you see little recoveries, right? Little let me try, right? So Freeport-McMoRan is up 0.6. Freeport-McMoRan has no business being up pre-market. This stock has dropped from $50 to $30. Let it fall. Stop buying the dip. Maybe that's the answer. Stop buying the dip. Let it go. That's it. Let it go. Just let it go. You look at the indices, right? Market. I just had a bunch of crap in there too, just for fun, just for jokes, right? You got a bunch of garbage in there. Up pre-market, down pre-market. No, post-market, right, after hours. And the stuff that was down after hours is up pre-market. And so there's just trading going on, like buck here, a buck there. Why is Rewalk Technologies, the sleepy Israeli company worth $60 million, up in after hours, but down in pre-market? Stock's not moving. It's just noise, right? And so trying to divine patterns in noise. So one of the stock areas that is really suffering is cannabis. So cannabis is way down, way down. I don't know what happened. I think the Democrats made some promises on cannabis. It just did not come true. So MSOS is a very nice ETF. They were nice. I tweeted about them. They were nice to me. They said I was a good guy, whatever, right? But look at that 1 year chart, 5 year chart, 25 to 50 or 48 to 11. So, oh my God, YOLO is an advisor share pure cannabis ETF. We're going to add that to our. That's really funny, YOLO, right? So look at that, just steady decline. The trend is your friend. If you would have shorted cannabis early, you would have made a ton of money, right? But so you look though, and after hours last night, cannabis was down and up, and now this morning, it's like pretty much all up. Cannabis is up. It's exciting. It's going up to the moon, right? But let's be real for a minute. Take a step back. Cannabis is down. So, wait it out. Fear of missing out is a cost-effective strategy right now. Just wait it out. I don't know. Maybe I'm just getting a little frustrated in the market right here, but high beta stocks, love it. High beta stocks are up this morning, pre-market. Okay. Where were they last night? Oh, they were down. They were down and up, half and half, 50-50, right? I think it's just noise today. Today's Friday. The stock market has 29-1 new lows versus new highs yesterday. Prove it. Here it is. The bond market at 29-1 new lows to new highs yesterday. In the corporate market. Prove it. There it is. Agency securities. Not bad. Flattening out, right? It's a 5-1. New lows to new highs. But still, that's mortgage. I have another mortgage here, MBS dashboard. Mortgage News Daily. The fixed rate is coming down. Mortgage-backed securities looking strong, looking good. Look at that. Bouncing off of a 98 back up to 100. Tried to go higher, but it couldn't close. So mortgage-backed securities at 100. Okay, not bad. Fixed rate mortgages down to 5 3/4. Pretty healthy. Mortgage-backed security prices are significantly stronger. They're up 0.25% yesterday. But again, look at the trend. The trend is that mortgage rates are climbing. In 2014, they hit 4.5. 2018, they hit 5. They came down to below 3, and now they're up. They hit 6. So you could bet on a day-to-day basis. But in general, mortgages are going up. Interest rates are going up. The Fed is fighting inflation. And now, for my favorite advertisement, and then we're going to close out. Be a bull among bears. So Yahoo Finance kind of got it right. No matter where you look, it's a bear market. It's a downtrend. Look at that downtrend. Speculative downtrend. Let's look at the Russell. Full screen the Russell. The Russell is 2,000 stocks, small caps. It leapt higher from 2020, looks like November 2020 to February 2021, and then flat as a pancake, and now coming down. That's it. There's not a lot of drama to this line. In fact, there's no drama to this line. There's no drama at all. The market's correcting. Just deal with it. You're losing money. Your 401ks are going down. Your stock portfolio is going down. If you're a speculator, you probably ought to just stay home, right? If you're bullish on this economy, because look at that. Small cap stocks dropped, recovered, coming back down again. It's like a sine wave. So, all right, thanks for watching. Sorry if I'm a little distracted or not getting the right story, But here's the basic story. Regional banks down. You got it. 2 European banks that are very much down that we have to look at. Credit Suisse and Deutsche. Your current efficient portfolio from like a week or two ago. We haven't run the model last couple days. Just haven't been feeling it. Mostly up. So it's funny, right? The efficient portfolio still goes up. When the market looks up, the efficient portfolios go up. It's nice. But you got to be ready for that exposure to the market. It's a downward market. Money managers, mixed. A lot of the smaller ones are up, though, which is nice. Cannabis and tobacco. Interesting is it went up yesterday. No idea why, right? It was just probably a risk play. Crypto and miners were down through the floor. And we're starting to get to the prices, I would say in another 3 months, maybe 6 months, we'll be at a point where we'll be buying Freeport McMoran. By the way, Love companies like this. I do. Look at that stock. It's a $10 stock. Let's go back max. Let's go maximum on a monthly basis. This stock goes up, 2008, and it crashes. It goes up, and it crashes. And it went up to 50, and I'm the jerk that didn't short it at 50, because I wasn't shorting back then in March. It looks like it's got a long way to crash. Freeport McMoran. I mean, this is what they do. This is the same thing like Cleveland Cliffs. This is the same thing. Okay? When copper's strong, these guys print money. And then when copper's weak, they lose money. They print money, they lose money. And most of us aren't around long enough or have a long enough worldview that we can see the larger patterns here. So let's look at Cleveland Cliffs. Cleveland Cliff had a different business though before. But look at that. It was a $4 stock. It went over 100. Then it dropped down to 20. Then it went up to 100. Then it dropped to like $5. Cleveland Cliffs is a boom or bust. And so when people complain, don't just stop complaining. How about Vale? Brazil. Okay. It was a $2 stock. Hit 40. God, I could retire on a gain like that. Dropped to 10. I could retire on a short like that. Up to 35. Oh, I could retire on that. Oh, shit. Down to $3. Up to 20. When you play in commodities, you're playing with fire. I bet you it's going to be the same thing. I bet you it's going to be the same thing. Let's take a look at the banks. Let's look at Citibank. Do you know I've been a customer of Citibank since the 1980s? I've never owned their stock. I can't even imagine I would ever own their stock. But we look at Max. So this thing, 26 to 60 to 120. Okay, so quadrupled. Then it dropped to 50. Then 100, doubled. Then 50. Then 25, quartered. Then 50, then 100, quadrupled. So I never thought of banks as being a way to lose half your money or quadruple your investment this quickly. You know, it's fascinating. You just have to know where you are in the movie, I guess. This is not that hard. All you had to do was buy Citibank before the rise, You'd have bought it at 25, you'd have sold it at, let's say, 100. You'd have bought it back at 50. You'd have sold it at 100. I mean, so fascinating. All right, so getting back to our markets, we are in a committed downturn. We are looking at recessionary fears. If we go to zero hedge, 7:30 already. A profit recession is brewing. That'll be the worst in 50 years. Okay. Do you know that in the middle of all of this profit recession and inflation, you can still go to the White House, whitehouse.gov, to the briefing room, and you can still see. It's going to take a little while. Probably not going to find it so easily. They've been publishing a lot of statements here, which is kind of annoying. There's a budget. Not budget-y, budget. I'm not going to find it. So We're spending a lot of money on things like Ukraine and all that. But what you're going to see is that they want to raise taxes on corporations a lot, like double them. So we're in a recession. The companies that can still make money are going to pay twice as much to the federal government. Now, the ones that are going to get away with it are the ones with the best lawyers, the ones with the businesses that are organized around tax breaks. But others are just going to pay more. So zero hedge, there's not even any news here that's interesting. It's just a lot of garbage. Is there any news anywhere? CNN? Ukraine withdraws from Severodonetsk. Okay, so Ukraine is walking away. Anything about business? Gun safety. Texas school district bans t-shirts, dresses, skirts, jeans, and hooded clothing. Everyone now has to wear the burqa. Wait, this isn't Iran. Why are we worrying about things like that? Falling copper prices. I told you that. That's a warning. We're making less things. Airlines facing pressures. 10 million Irish people left the country. Okay? That's terrific. There's no news. There's no news. Well, this is interesting. Small banks running into trouble in China. Okay, not surprised. They don't have the same FDIC and the same kind of thing that we have. Any news? As mortgage rates keep rising, more buyers are priced out of the housing market. Okay, the dream of owning a home is out of reach for 4 million Americans. Okay, it was always out of reach for most Americans. It's hard to buy a house. It's expensive to pay for a house and to keep it going. We've had to replace the furnace, the air conditioner, the washer, appliances. We got to do a dryer. We need a new refrigerator. We got to fix the patio. We've had to do the floors. It's expensive to have a house. I get it. But what they're saying is mortgage rates are high. See if I can find the chart with the mortgage rates. No, I can't. Just know the mortgage rates are up, like 5 3/4. So, all right. Hope you enjoyed the video. You realize that today we're not going to be doing much trading because we're in a down market. It's Friday. Got no idea what's going on. I think you're just getting a lot of noise around a downward trend, and just be safe in the markets. Good luck. If you like the video, we're not paid to make these videos. Please hit the subscribe button. 2 things happen. One is you can sign up for notifications to find out when our next video is. But also it lets YouTube know that you like the channel, that you want to know about it, that you're supporting it, not for money, for free. And so then they promote our videos a little bit, which is great. They spread the word. We're not paid to make the videos. We don't get any money from this. It just helps us to craft our messages. And leave a comment. I like when you comment. Even if I'm not going to agree with the comment. Even if you say, Jeff, Freeport McMoran, you're totally wrong. Or Cleveland Cliffs. Or the fact that copper prices are going down. Or what you said about Citibank. Terrible. Or I want the president to raise corporate income tax rates. Or I think Red River Bank Shares, Louisiana Savings and Loan, is the greatest stocks in sliced bread, Jeffrey. And you're not being helpful. Just tell me what you're thinking. Let's have a dialogue. I think it's great. All right. Take care. Good luck. Bye-bye.